Good morning, traders, and welcome to the Pirate Traders Morning Show. My name is Charles. Today I'm joined by Paul. How's it going, Paul?
I'm doing well. How about y'all?
I'm good. The chat is giving us the thumbs up this morning. We got 44 people hanging out. Only 6 likes. I think we can do better. But for now, let's jump into the TA for the morning. Please make sure you hit that like button and the subscribe if you're new to keep track of what's happening every morning in the markets. All right, so I'm looking at the ES here on my chart in Market Profile software. And essentially what we were paying attention to yesterday was the fact that we had been in balance and we had broken out of that balance. So we were in this balance area for a couple of weeks going sideways here. We broke out. Last week, we back tested. So that told us the highest probability was that the market was going to get excess, that it was going to get momentum to the upside. We knew the bare minimum of that move would be at least the size of the range of balance. Well, we did that yesterday. With the spike up at the end of the day yesterday, we reached that sort of target to the upside. So what does that mean? Well, it means the market doesn't have to keep going. It means the sort of slingshot effect of this built up balance has already played out. We already got the move we would expect to get. Now, that certainly doesn't mean it can't keep going. It can keep going for weeks, for all we know. But it's just the idea that they don't necessarily have to keep going. They could run out of steam here. So I'm looking at yesterday's range and how the market traded, and it is telling me two things. One, we definitely have momentum and still have it to this very moment, so the market can absolutely keep going, but the market is beginning to get itself a little bit overextended. So yesterday we left behind a gap that is unfinished business at the low, and the day before that we left behind single prints, which is unfinished.
Charles, just real quick, the gap is around 20,500.
The gap.
I'm sorry, I'm on
the
ES.
NQ. Yeah.
I'm
Let
on
me look
NQ.
at the NQ
Yeah.
right now. I'm on the ES. The ES,
Pardon
the
me.
gap is between 58.68 and 58.73. I can look at the.
So that's a potential target for the market at this point.
Yes, it is a magnet, right? So as the market tries to move higher, it's going to have that little magnet pulling on it saying, don't run away yet. Come fill this gap.
Cool.
Yeah, so in the Q, that is 24.98. So again, that doesn't mean the market can't go higher today. It doesn't mean the market can't just keep the momentum going to the upside. It absolutely can. And to me, it looks like it will keep the momentum going to the upside. But whenever we have momentum, whenever we have excess and the market is moving in a certain direction, we always want to pay attention to the weakness that we leave behind. We want to pay attention to how many sets of single prints, how many gaps, how many weak or poor references are we leaving behind? Because the further that the market goes and the more of those weak references that we leave behind, the more likely it needs to roll over and start coming back for them. So again, the one gap yesterday means nothing. The market can absolutely keep going higher today. That is, in my mind, the highest probability. But I'm just aware that we left behind the gap. So if we don't get momentum up today or the momentum runs out, I can bring it back to the forethought of my mind. Okay, so let's zoom in a little bit and we'll look at yesterday's range. So we pushed up first thing in the morning, and then we spent the rest of the day basically slowly melting to the upside in the upper end of the range. All of that is bullish to see. Pushing higher, bringing in volume, and continuing to push higher is all a sign there is still momentum. This market is still going, and it will likely keep going. The overnight range, very mechanically, just traded inside the upper end of yesterday's range. So that tells me that this slow melt up is because of the conversation that Paul and I were having a week or two ago, where we were talking about the fact that 75% of the liquidity in the ES options market was puts, right? And that it was like, oh my God, everyone's buying puts. Well, if everyone's buying puts, guess what the market makers want to do? They want to keep the market going away from the strike prices of those puts so that they are worth less and less over time. Yeah, so this slow melt to me feels like that option-driven sort of force away from all those strike prices that those puts were purchased with, okay? So that slow melt can absolutely continue, and the fact that the overnight market traded so mechanically in such a tight range tells me that that's likely what's going to happen. So the first thing I'm looking for this morning as the market opens is a chop zone. The chop zone is essentially between the overnight low, which is at 59.02, and the previous day's high, all-time high, which is at 59.18. As long as we're in between those two, I will assume we're going to go sideways. If we get above yesterday's high, I'm bullish for continuation higher. If we get below the overnight low and to get new selling, the end new selling is important. The first thing I would look to do is test the week reference at 58.98. If that doesn't reverse the market, I'd be looking to head down and test the sort of, bottom of the range from the second half of the day yesterday, which would be around 58.90. If that's not enough to reverse the market, then I would say, okay, we're coming back for this gap. So I would describe myself as bullish above 5,900. I would describe myself as neutral between 5,900 and 58.90 and bearish below. Okay. If we look at the NQ, just like the ES, has momentum. It broke out of its, miniature balance area yesterday. So whilst they're both going up, they're not going up the same way. And that's an important nuance. To my mind, it is more likely that the Q fills its gap today than the ES, because that would simply be a back test of this little mini balance area, right? Breakout, back test, continuation, all-time highs. Now, the ES has been at all-time highs for a couple of weeks, or for over a week now. So that tells me that the NQ is heading to all-time highs as well. When the one market is making all-time highs, almost always the other market does as well. So I think bigger picture, the NQ is very bullish and is heading up towards its all-time highs, but we may need to dip back down and fill the gap from yesterday first. So I would be a little more cautious as a bull on the NQ than I would be on the ES intraday today. But both markets to me seem like they want continuation higher.
Charles, one of the things that we're not thinking about or we're not talking about necessarily, but I think it's becoming relevant, is that we're 3 weeks out now from the presidential election. And not picking winners or losers, but I think the market is definitely going to temper itself. I mean, I'd say fairly that there's not a clear winner in the election results right now. There's no clear outcome to what the election is going to provide. And so a lot of conservative thinking is going to come into play in terms of how aggressive people want to be and put risk on right now for the next 3 weeks and until there's a clear resolution on the results.
I think that's completely fair. Yeah, absolutely. I mean, yesterday, obviously, it was a holiday, but the volume was very thin. It will be interesting to watch the volume over the next few weeks and see, is there a lot less participants in general? That being said, the results of the election will cause a move in the market, right? Once the election, now I can't tell you Trump wins, it goes up, she wins, it goes down. I can't tell you that, right? I can't tell you what the reaction will be, because that is always completely uncertain. But I will say the people that want to gamble on this will be positioning themselves over the next few weeks to be prepared for a large move one way or another, whether that is a large liquidation or a large move of short covering. It'll be interesting to watch. Hard to predict, though, ahead of time what it would be.
That's for sure. Well, I think it's just going to temper activity and, maybe be pinned more often is what I hesitate to say. I don't like to say that, but
yeah, I don't like to hear that either as a day trader.
Yep. But that's what I think we're going to be looking at. It's going to get more intense. The being pinned part is going to be more intense in the next 3 weeks than it's been.
I think it's been that way as of late. The market has been really funky lately, where it just seems like both on a daily time frame. It stays stuck in ranges and then instantly breaks and then stuck in a range, and intraday. I mean, it's
Yep.
just very mechanically held in place. It's like everyone's walking on eggshells and they don't want anything crazy to happen.
Right.
But yeah, my prediction is still slow melt to the upside, at least until the NQ starts making all-time highs, for sure.
Right. Which would be around 21,200. Is that fair enough?
Yeah, I have 20,916 as the all-time high.
That's what you, okay. These contracts, when they roll over, I think it's kind of relative in terms of where they get it. Maybe we shouldn't be looking at the contracts to call all-time high as rather just the index themselves, the underlying index to call an all-time high on these guys.
Yeah, I mean, you don't have to get too like granular in terms of ticks, but yeah, when the NQ is above whatever was the previous all-time high, and
Yep.
the NDX is above the previous all-time high, and the QQQ is above the previous all-time high, then you know it's all-time high.
Yeah. No, I'm just remembering that the September contract, I think, did trade above 21,000, but because of the way they calculate it, it kind of rolls back. So.
Yeah, I always because that's what gets complicated, right? Some people, the charts that they use combines contracts, like
Right.
it uses math to combine the data and pick a new level. I just
Yep.
always go by what was the all time high in that contract at that time. That to me is just always what I keep as the all time high.
Because I would, the way things are going, I would certainly expect NQ to be looking at 20,900 this week. That wouldn't surprise me. Maybe 200. What's 200 points between friends?
Yeah, no, I agree completely. I think, like I said, if it may need to dip back down and fill the gap it left behind yesterday, but other than that, I see no reason for it to do anything but go make an all time high.
Yep.
I mean, the whole world sees the all time highs on the ES. That's going to get people bullish.
Yep. And oil, on the other hand, has dropped again, or it's back down to 70. At least it was overnight.
Oh, boy.
So oil is being oil. As best I can tell you.
Ooh, it's back to test that trend line here. Let me turn on my chart real quick. So this is potential. Whoops. Oh, I didn't mean for that to pop up again. Go away. This is potential back test of this break, of this move. So we were talking about this trend line. Can they get through it? They did. That caused a big move, right? We came back and back tested it the first time. It held. That caused a big move. So now we're back again at this same trend line. So can it hold again? Meaning basically today, can we reverse and leave a wick behind down there? If so, I'd look for another big move. If not, if we close below we basically close below 71, then you might be looking at another pullback. Man, oil really just flips on itself over and over again.
I think there's much more. I think world politics play such much greater role in oil than in these indexes that we're normally looking at. So
yeah, it's way different than stocks. Where it's just like, is the company doing well? Is it going to make money in the future? Okay, great.
Yep.
All right. Do you have any other news or anything like that you wanted to cover?
There's nothing specific out there. We are coming into earnings season, so we may end up looking to see whether or not we think some of the larger stocks are going to move the indexes. So earnings is starting up really this week, and they'll be in full swing for the rest of October. A lot of guys showing up. And then China is retracing. So what can I say? China is just it's a black box to me, but it sure does move. Here's the Hang Seng over a period of time is just going up and then come back down. So
yeah, it was that over excitement, overly quick. The market
irrational exuberance.
It had multiple 10% days, and then all of a sudden now it's having 10% down days.
It's like, oh my goodness. So, no, other than that, that's kind of what I see going on. So, Middle East is always the Middle East. That's the main thing going on. There's nothing going on in the war with Ukraine other than ongoing carnage. So, I guess that's not tradable. But
Yeah, it's old news to traders. It's well priced in. Okay,
So,
well, great. We will leave it with that then for the day. As I said to all the traders trading the ES or the NQ, I am feeling bullish. Doesn't mean the market can't head down for yesterday's gaps, but keep an eye on the overnight lows. If we stay above them or we just dip below and then reverse back up, I would be a bull.
cool.
Thank you very much, Paul.
Thank you, Charles.